Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report with Alpari. And we have a lot to talk about because we do have full risk of mode on the market right now, so an escape to safe haven assets. Escape to precious metals, Swiss franc, Japanese yen, escape from stocks and from emerging markets currencies. Risk off mode was triggered again by increased tensions over Korean peninsula because North Korea fired missiles which flew over Japan, which triggered this risk of mode reaction, which increases the tensions over those 2, 3, actually 4 or 5 even countries, because not only North Korea and Japan, but it's mostly between North Korea and United States. If there is a United States, there is also China there. There is obviously a South Korea. So those 5 countries are involved on this conflict there, which sparks this reaction. So after we got news about this missile, it wasn't a surprise that safe haven assets will gain in value, and instruments like emerging markets currencies will lose. Okay, so let's see the charts right now. Well, first the calendar, obviously. Yesterday we had a bank holiday in UK, so the volatility the volatility was quite high, but the liquidity was a bit lower because London was not working. Today the calendar is also empty, but now nobody looks at calendar. Everybody's focusing only on the geopolitical side of the market. We shouldn't be sad with that the calendar is empty, because we have enough influential events that affects the markets. If you want to open a position for New Zealand dollar, watch. If you want to open that today, watch, because overnight we'll have a speech from Mr. Wheeler, a Reserve Bank of New Zealand governor, so it should affect New Zealand dollar, so watch for that. We showed you that on Friday. We showed you the calendar for this week. It wasn't packed actually. But Donald Trump, Kim Jong-un, they covered that entirely. So we don't need to look at the calendar. We don't need to be sad that the calendar is empty, because we have those 2 gentlemen, and they can influence the markets even more than, for example, non-farm payrolls, which will be shown on Friday. We'll have non-farm payrolls on Friday, because on Friday, it will be first day of the month. So non-farm payrolls in US. From the calendar point of view, we will wait for that. So now we can look on the charts, guys. I hope you all see the charts right now. What do we have here? Well, we'll start with the cable. Why not? Because we continue this upswing, which started on 38.2, and not that you were not that we didn't say that, not that we didn't warn you about that, because we did, that here is a great place for a reversal. It is absolutely amazing place created by 38.2 Fibonacci level, created by lows from July, by highs from December, lows from April, and we said that it's an awesome place for a reversal. And we traded that ourselves. Account history, this is my live trading account, British pound here, 1000 euros profit. I also went long on euro dollar, which you can see 2000 euros profit. Those two positions were opened last week. I closed that today, few hours ago, together 3200 euros profit from that upswing. So quite alright if you ask me. Let me put that on the chart. I caught almost all the movement here. Well, so far I opened here. There was an inverse head and shoulder formation here. Left shoulder, head and right shoulder. We broke the short-term downtrend line. We went higher on Friday. That upswing was caused by Janet Yellen on Jackson Hole Symposium. The price went significantly higher. New week we opened higher, we closed the gap, very technical movement, just a gap closing and an upswing. That's why I was moving my stop loss order higher, stop profit order first to protect the profit, then higher, and I closed that here because the price met local resistance. It was time to cash that profit. We are on 23.6. I don't say that it's the end of an upswing, but as a swing trader, for me it's alright. 1, 2, 3, 4, 5 days. I'm a swing trader. 5 days is fair enough for me in terms of the length of the position. That's first important resistance here, and the price does not have to, but can stop here. Especially that it's a combination here of a uptrend line here as well, and a horizontal support, horizontal resistance 23.6. So that's a good place to start a reversal. In case that this resistance will be broken, that should trigger another buy signal on this pair. So only the fact that I closed this position here does not mean that I will not reopen it a bit later. So that's one position. Another one is euro dollar. Euro dollar. I had that opened even for a longer time. So euro dollar, I opened here after the price broke the upper line of the flag, because it was here. Okay, the price broke the upper line of the flag, went here. There was a bit of a reversal, but they used the upper line of the flag as a support. Then they created a smaller flag. Then there was a Friday. So Friday was here Janet Yellen, then Mario Draghi. We broke this horizontal resistance, which cleared which activated a few stop loss orders here. The price went even higher after Mario Draghi. Well, I'm sorry, that was Janet Yellen, that was Mario Draghi. On Monday, classical movement, so gap closing movement and an upswing, and here is a weaker American dollar here, and the price got to the upper. Why this rectangle is so wide? Because, let me show you that on a weekly chart. The upper line is our lows from 2012, and the lower line is lows from 2010, and lows from 2010 were resistance here, and now the resistance are those lows from 2012, which is an occasion for take profit action. So that's why I also closed the position here, but that was a good one. 260 pips. I think that the stop loss order was somewhere here. Or even, no, it was here, 60 pips, so it's 4 to 1. even more than 4 to 1. Well, the profit was 4 times bigger than loss. I could have opened much bigger position because I opened only with the risk of 600 euros, which is 1%. But I use only very little risk in this live trading account. If I open a position, if I allowed myself to open like a position 2% loss on a position, that would be much greater profit, 2 times bigger, like 4,000 euros. But as I say, bigger profits are. There is also a potential for bigger losses, so I keep it that way. If I lose only 1%. If I win, that's a bit more, 4%, almost 4% here on this position. That's euro dollar. Enough about my position here because it's already closed and we have to look somewhere else. But here it's a good place for a reversal. It's a good place to start a correction. Actually, this correction can be quite big. Aiming this support or this support, it won't change the positive sentiment on euro dollar. Even if the price fall like to this area, that wouldn't change anything. As long as we are above the green uptrend line, the sentiment is definitely positive on euro dollar. A weaker American dollar affects almost every instrument. Here on New Zealand dollar, the price defended this neckline of this head and shoulder formation, left shoulder, head and right shoulder. The price bounced off this support and went significantly higher. There was also this inverse head and shoulder formation, maybe not the prettiest one in the world, but still right. We broke this horizontal resistance. We're aiming another horizontal resistance here. There's a lot of resistances here, but as long as we stay above the green area, the sentiment is positive, but I wouldn't say it's the best trade in the world. I would find a better one. Gold. Gold is having a great month. Let's switch to monthly chart. August is pretty awesome. There was a January. August is a bit worse than January so far, but we still have some time. Why is this month significant? Because it is. Here you can see long-term chart of the gold, and actually August breaks the long-term downtrend line here, which is present here, and triggers actually a long-term buy signal, right? At least aiming at least this yellow area, which is around $1,380 per ounce, so $60 more. But I think that the potential is much bigger than that. Much bigger than that. That can be the first target here. And actually, from the technical point of view, we are very, very positive on gold, and the price can aim much, much higher. I'm not telling you like $2,000 per ounce. Maybe not. Maybe that's not the realistic target. But from the technical point of view, it all looks great. On a bit smaller time frame, you can see again that it all started on Friday. Here with the weaker dollar caused by Janet Yellen's speech on Jackson Hole. The price advanced higher. Then on Monday we broke $1,300 per ounce resistance, which actually triggered here a buy signal, and many stop loss orders were activated here. Why is that? Because that was a very important resistance. and a lot of traders who are going short here had their stop loss order somewhere here, and they got activated. And the stop loss order for a short position is a long position. So that gave just an additional fuel for this movement, and the price is advancing higher, also influenced by North Korea, by those tensions. And the sentiment is very, very positive. We can use $1,300 as a support, but not necessarily, but we can. The thing is that the first target is $1,370 per ounce. It's around 1,380, right? So it's not a pharmacy. This resistance is quite a wide area. The price can go somewhere here, and that's the potential target for gold. Next one is silver. Silver broke the also long-term downtrend line, but not as long as gold. Because as you can see for silver, the situation is a bit looks a bit different. That were volatile times on silver. So on gold it looks a bit better from the technical point of view on a daily chart, but silver is slowly getting there. The first potential resistance for silver after breaking this downtrend line is 18.5 dollars per ounce, and the chance that we'll get there, the chance is pretty big. American dollar to Japanese yen, also very interesting situation, because we broke those lows from August, here labeled with the blue color, which triggers actually a sell signal, but there is also a strong support there, which we touched already. Let me get it closer here, but okay, we already touched that, which triggers taking profit action, and as long as we stay above this yellow area, the sentiment cannot be fully negative. There is a sell signal, but full sell signal will be triggered only when the price will break this yellow support. You can see it's significant, and after this there should be no stop till the lows from November, so when Donald Trump was elected as a president. Breakout of this horizontal support should open us a way for those lows from November 2016. S&P 500 also negative, as we said, that caused there is a risk of mode, but traders in United States, you know how they are just buying everything what they can. On a daily chart, we didn't break this horizontal, lower line of the channel up formation. To be precise, we are bouncing off this level right now. So on S&P 500 there is no sell signal. There is no sell signal whatsoever. We are still above two important horizontal supports. There's a green one, there's a gray one, green one and gray one, and a trend line here. So as long as we stay above this area, the sentiment is positive. Still, American dollar to Canadian dollar is still going much lower. That's no longer a head and shoulder formation. That's why I don't like when in a head and shoulder formation this neckline is decreasing, because it's hard for a breakout there. But it's kind of a lower line of the channel down formation, let's say. Price is slowly getting to this horizontal support, and we should get that and at the beginning of the last week. So here we said that the sentiment on this instrument is negative, and almost every day we are making lower lows and lower highs. No surprise there. On euro to Japanese yen, yesterday we wrote an analysis which was positive for euro to Japanese yen, and the price is advancing higher. So again, no surprise here. Euro is in a very good shape. Here after the breakout, we had a correction which tried to aim this upper line of the wedge formation. Oh, we almost get there. We almost got there. It's not a pharmacy, so a difference of 2 pips, 3 pips is not a big difference. And after that, the price should easily go higher, much higher than that. Euro to Australian dollar, also we wrote a positive analysis for this instrument, and also the price advancing higher here on euro to Australian dollar. What we have here is an inverse head and shoulder formation, shoulder, head, and a right shoulder, breakout of a neckline. Then we also had a flag before. A flag was positive. We are above the long-term uptrend line. We are above 23.6, above 38.2. So every single sign is pointing north, and we should, with this sentiment, I think we should get higher. We should continue this positive sentiment on this instrument. American dollar to Swiss franc. That's why I told you that this bullish pattern from the July is no longer on the table, and I told you that somewhere here, because it didn't look good with those candles with big heads here. The price didn't want to go up, and which created a sell signal. I told you that as long as we are between that red line and this blue line, there is a sideways trend, and breakout of the blue line should trigger a sell signal, and that's actually what happens here. So there is a legitimate sell signal on American dollar to Swiss franc. Another pair is Australian dollar to American dollar, which made new highs, new local highs. We shouldn't be surprised about that. That's what the trend was. There was an uptrend. We bounced off the long-term uptrend line. So full buy mode on Australian dollar to American dollar. American dollar to Mexican peso. Peso is a bit weaker because, well, Donald Trump is constantly saying about this, about terminating a NAFTA deal. Sorry. That breakout can actually be dangerous for Mexican peso, as we broke the downtrend line, which is with us since March. And after the breakout of this trend line, we have a way open to a horizontal resistance here, which is a very important resistance, which I will show you on a daily chart. So, in my opinion, we actually should get there soon. Now, British pound to Japanese yen, here. American dollar to yuan. I was wondering if we can bounce here, and the answer is no, we cannot. The price broke the lower line of the flag, which deactivates this line. 38.2 didn't work much, so there is a potential for a further downswing, maybe to 50% Fibo. But actually there's no, the technical situation here is not very nice, so I'm gonna delete this instrument, as I prefer clean technical trading. DAX. I wrote an analysis yesterday for DAX, but for Polish investing website, and we said that there is a potential for the price to go short, and we were here. We opened with a gap yesterday. We closed that gap. Almost. We closed that gap, and the price went significantly lower. So we broke this horizontal blue resistance and this dynamic support connecting recent higher lows. Sentiment on DAX is very negative. Here we do have an influence of few factors. First of all, much stronger euro, which is affecting German exporters, German companies. We do have problems with car makers in Germany. We do have problems with German companies because of the sanctions on Russia. Because many Russian companies, they want to make business with Russia and they cannot now because of those sanctions. And also this North Korea stuff, which is affecting the global markets. So that is why we have such a strong drop on DAX, and we are on the lowest levels on DAX since March. That's pretty significant if you ask me. Euro to British pound is advancing higher, and maybe we beat those highs. Here is high 93.04 and here is 93.05. Yes, so we beat those highs from October 2016. Sentiment is very positive, but I would be scared to enter now with a long position because, well, it's too positive, right? So I would be scared of a correction. It's not my style of trading to enter on all-time highs with a long position. Oil, I wanted to show you oil because even despite that interruptions with production on Gulf of Mexico or disruptions from Libya, etc., the demand for oil is very low, which is pushing the price very on low levels. Also, you can see that this low demand for oil is pushing the price lower, even despite the fact that the American dollar is much weaker. So American dollar is losing, and even with that, oil is not going higher as other commodities. Like for example, for gold, weaker oil is a very good. For gold, weaker dollar is very good, but oil cannot use that and actually made lowest levels since the end of July. And as long as we stay below 38.2, the sentiment is definitely negative. Dollar index shows this pressure on American dollar. After this flag and this head and shoulder formation, we broke the neckline, we broke another horizontal support created by those lows from August, and we are heading lower. Well, after such a strong drop, there is a chance for a reversal here. But I wouldn't bet on that a lot of money. That's a pure counter trend trade based on purely speculation that we are just lower. I prefer to trade on facts, on signals, not just on a signal which tells me that okay, the price is so low that it's time for a correction. For me, it's not a significant trading occasion. Also, I would like to show you American dollar to Polish zloty, which reached long-term support created by those highs from 2012, from the beginning of 2012 and the middle of 2012. That was a resistance there, that was a support in 2015, and we reached that level. So even despite the fact that emerging markets currencies are losing right now because of the risk-off mode, we can see that in pair with American dollar we are gaining because American dollar is very strong. But that actually can be it for this reversal. The next target is here, 340. I wouldn't mind if the price would get there. But here there's a chance for a reversal on American dollar to Polish zloty. Okay guys, that's it for today. You got a lot of trading signals today. I hope you enjoyed this daily analytical report. And now we're gonna have a short break, and after that a webinar for about basics of the Forex market, so for beginners. And I hope to see you all there. Thanks very much guys, and see you tomorrow.